How are you?
Good.
We're just waiting a few minutes for the chair and vice chair. I just called the chair and he's logging in now. As soon as he's in, we can start.
Hi, everybody.
Hi.
Hi, Koji.
Hi, Mark.
Kuljit, are you ready?
I'm ready. Yeah, sorry, I was driving. I had to get to a computer pretty quick.
No problem. I'm just going to establish quorum.
Okay.
Chair Colcutt,
I'm here, present.
the vice chair is absent so far. Commissioners Claras,
I'm present.
Fry,
Here.
Richmond,
Present.
Whipple.
Present.
Great. So we have, how many is that? 1, 2, 3, 4, 5. We have 5 commissioners. We have a quorum.
Great.
Would the chair like to lead us into the Pledge of Allegiance, please?
Absolutely.
Yep.
Okay, I pledge allegiance to
I
the
pledge
flag
Of the
United
United
States
States
of
United States of America
and
and
to the republic
Republic
for which it stands,
stands
one
one
nation,
nation
under
under
God,
God,
indivisible,
indivisible,
with
with
liberty.
liberty
liberty
and
and
justice
justice
for all.
Okay, super.
Thank you. Do we have any members of the public who would like to make public comment before we move to the items on the agenda?
I do see, no,
I do not think there are any members of the public at this time
great.
interested in making public comments. So we can move on to the agenda. And the first item is the approval of the meetings held on November 15th. Any comments or corrections required on that one?
No comments for me.
Yeah, it looked okay to me.
I was traveling that day, sorry. So,
Would you like to move a motion to approve?
I'll move.
Okay, too many people. I'll make a motion to approve the minutes as drafted.
Do we have a second?
Sure, John, I'll second.
Thank you. Okay, I'll call the roll on that one. Chair Kalka,
I will abstain. I wasn't here.
Commissioners Claras,
I approve.
Fry,
Yes.
Richmond,
Yes.
Whipple.
Approve.
So we have 4 to 1 abstain and 1 absent, 2 absent. So that one's moved. I'm going to move to the second item, and I'm going to share my screen for that one. And this is the financial statements.
Yeah.
So you can see my screen. Is that okay for everybody?
We can see you, John. We can't see your screen.
You can't see my screen? Yeah,
I'm looking at you. Yeah.
I think-
Maybe your screen is also there. No.
I think that's absolutely right, because I need to share it for you to see.
There it's coming.
Okay.
Okay. And which screen can you see? Can you see the whole presentation?
This is the presenter's screen showing.
Okay, so I'm going to swap that.
There you go.
There you go. That'll do.
That actually won't do because I need to read. So give me 1 second.
We don't mind if we see your comments. That's all right. Don't worry about it.
Okay, there we go.
Great.
Great. So today I'm going to present to you the FY21 ACFA, as it's called now. It's no more. It's not called the CAFA anymore, which was an easier term to say. But before I start, I would like to first
Are you
thank.
serious? They changed the name?
Yes, they changed the name, Chair, because the word CAFA was found out to be a derogatory term in South Africa. And there was a complaint about it, so they revamped it and shifted one alphabet from one side to the other.
Okay.
Right. So I would like to thank June, our finance manager, Liz, our senior accountant, who's leaving us at the end of the year, and Josh, our accounting tech, who left 2 weeks ago. So we are 2 down again. And as well as the other hardworking staff in finance for helping us put this all together. So today I'll go over the document, the ACFA document, and I'll try to explain how I like to read it in terms of content. So I'll go through the sections, contents, and then we'll move into the 2021 results. We'll do a year-over-year comparison. And then what will be our next steps for the commission would be to receive the report and refer it to City Council. And finally, I'll have Grace from Mays and Associates provide her comments on the audit. So in terms of the CAFR, I like to explain how it runs. So you have the introductory section. Here's where you can see the org structure of the city, the department heads, the scope of the city services, and more importantly, the transmittal letter that comes from the city manager. It has a lot of core information about what happened during the year. And then the financial section is where the meat of everything is. Here you'll find the audit notes, the notes to the financial statement, as well as the management discussion and analysis, which is known as the MD&A. That's really good to read to know what happened at the micro level. You'll also be able to see the fund balances and revenue expenses and all of that within the financial section. And then towards the end, you have the statistical section, which is great. It gives you a 10-year summary. It gives you demographic information, economic and statistical data, as well as other data related to city operations. And then going further, one step further on the financial section, here's where I like to kind of explain, you have the government-wide financial statements, which is the governmental activities, which is generally a long-term focus. It goes on a full accrual basis with the use of economic resources. It includes the net pension liability, long-term debt. So in general, it is a long-term focus for the city. And the business type activities are within the government-wide financial statements, but they're reported separately because business type activities are related to charges that are directly to clients, like a sewer fund or solid waste funds. And these are related to charges. And we also have the storm drain fund, which is an enterprise fund, but currently it doesn't have enough resources to support itself. It has general fund support. And here we use the full accrual, just like how you would run your other businesses. If there's an asset, you would capitalize it within that fund itself. While if it was the general fund, you would not capitalize it in the general fund. And then to the right, you would see the fund financial statements, which is the second part. And that would be divided by the governmental funds. And we will concentrate more on the governmental funds because that's where the core meat of our report will be. And that uses current resources. So it also uses the modified accrued principle, which means it is not the same as you accrue in a private company. One example I can give to explain that for the benefit of the commission is if you receive revenue in a private organization, you can recognize revenue for work you have done at the end of the year. In governmental accounting, you cannot recognize that revenue unless you receive it within 60 days of the end of the year. So that's one kind of modified accrual basis that government activities have. So if you had $1 million receivable and you didn't receive it within 60 days, you can't recognize it as revenue in the same year. And then, of course, finally, fiduciary funds, these are held for others. So we have the Rumundo curb and gutter, and then we have the NCLA funds that we keep. Those are third-party funds. We have no control over them. They don't belong to us. So here's a core graph showing 78% of our activities are governmental, 22% are business type, and I've shown 105 million relates to governmental and 30 million relates to business activities, which is our sewer fund and our solid waste primarily. Now, here I'm breaking down how the report's going to look.
What is that 105 million? That's the
total the governmental activities on the net position, and I'll come to that on the following slide. You will see the details there. So the ACFA can be intimidating and confusing, and that's why I'm trying to break it down a little bit so it makes easy understanding. I'll explain some of the areas that I look at when I try to evaluate other cities' results. Firstly, the independent auditor's report. That's a great place to see. It's critical to see how we did. Are we presenting our financials fairly in accordance with governmental accounting standards? Were there any comments made against the city? All that would be on the independent auditor's report. And then on the transmittal letter, here's where you would see the general overview of the city for the past year from the city manager and finance director's perspective. You will see some of the initiatives and projects accomplished during the year. And towards the end of that document, you would see our view of the overall economic outlook and what we feel is happening in the forecast. And then on the MD&A, here's where you'll see all the financial highlights. You'll see the variance analysis, and this year we have revamped the MD&A completely to provide a lot more information for users. And then finally, the financial statements themselves, where you will see the statement of net position, you will see the notes to the basic financial statements, and those will be on page 57. And you'll also see budgetary information from page 93 onwards, which is very useful information for you to see. Now, moving on to the actual results, we got a clean, the city's financials are fairly stated and in conformity with accounting principles generally accepted in the United States. I'm repeating that because that's commonly known as the unmodified or clean opinion. So as far as the audit goes, that's the highest level you can receive. So there were no adverse comments on the financials. So here I'm talking about the net position, and Commissioner Chair Kulji, this was your question on what that number was. So the city's total government-wide net position was 135.9 million. The governmental activities was 105.7, which is the general fund, the park in lieu, and every other fund in the city other than the ones that are related directly to the sewer or to users. And that's the second line where you see business type activities, which would be a sewer fund and a solid waste fund, had 30.1 in net position. Moving on to revenues, citywide, we had 61.4 million in revenue. Governmental activities were 53.4 million, and business activities were 8 million. On the expenses side, we spent 70.8 million. Again, on the governmental activities, it was 65.14, and business type activities was 5.66. Now, why does that look high? Because CIP expenses, remember, will be in there too, because this is rolling all the different pieces together. And as I go through this, it will become very clear. And just to explain net position, again, net position is the long-term focus. It contains all assets and liabilities, while the fund financial statements would not. The expenses are incurred as they occur. So to give you an example, if we buy a police car from the general fund, that would be expenses at the fund level, but be captured as an asset on the governmental side and then capitalized. That's why you have the government-wide, which is the entity. So that's the little bit of a nuance between public accounting and private accounting.
So sorry, so we've done net positions every time in the CAFR, I imagine, but so basically you're adding up all the revenue and all the expenses to come up with the net position, right?
So you also have it's like a balance sheet. You have the assets and the liabilities.
Yeah.
And the revenue and expenses that would roll into the net position, because they would become assets and liabilities.
So we have like 53 million in revenue, and then about 40 some more to make that 105, 46 million more to make that 105 in net position in expenses, right?
Yeah, right. So there are assets here. The net position is like a balance sheet in a private company, where you have the prior balance and then what adds to it, whatever movements happen during the year. Does that make sense?
Yeah.
Okay.
I think just so you know, John, I mean, I think if you're going to present this to the council, we've never discussed net position as sort of as a term or as a concept. So it's going to throw a few people off when they see that 105 number.
Right. And it will be more clear, and I'll make sure to explain to them what I'm trying to achieve here, because we have I'm trying to explain the CAFR versus really, talking about a budget document. So it will get more clear as we go through the presentation, because we are still in the net position. We are still talking about governmental activities so far, which is overall everything that the city has. So here, we're now looking at the net position in terms of governmental activities. And here, this might give you some clarity.
Yeah.
So assets here increased due to higher revenues and lower spending and higher capitalization. So what does that mean is that we spent around 22 million on the CIP, and then we build a new community center. That would be an asset. So it would add to our net position. So it would be expensed in the general fund, right? But it is an asset. So citywide assets are 165.7 million. And this is across the board. This is on the governmental side. And then this is how the balance sheet is actually presented. And liabilities have increased. You see the liabilities here would have increased because we had higher payroll accrual, as well as we had unearned revenues and ARPA grant receivable that was booked during the year. So all those would have flown in 22. And then the deferred inflows and outflows, these are related to pensions and to the pension side of the equation. And I can explain that in detail if anyone is interested. It's pretty complicated. And what I showed down here was the net pension liability, where you see the total governmental plus business type. So I wanted to point this out that in 2021, our net pension liability is 42.4 versus 39.1 in 2019. So that means our net liability increased by 3.2 million, primarily due to assumption changes, the discount rate reductions, the mortality, and all of those. But a key to note here is that these numbers are 2 years old because they flow it backwards. We have, as you see, deferred outflows. So these are almost like when you say deferred outflows, think about prepaid expenses. They are an asset, so they will reduce a liability in the future, versus deferred inflows are more like accrued liability that would increase the asset later. So they would net each other out, but there would be assumption changes every year. But because our prepaid is so much higher than our liability, we could anticipate that this number would technically read as 5 million lower. Again, we also are going to be paying another 5 million, which the council approved to pay CalPERS. That will help further reduce this number. And another key important thing that I want to point out here is that last year, CalPERS made 21.3% return. That is not reflective here because this valuation is still 2 years old. So it will only not even reflect next year, it will reflect in the year after that. So it's not all doom and gloom when you see a 3.2 million increase. I would think that would be negated and go even further down. And then also further, I want to explain that when we talk about ARPA grant receivable, what we did was we actually received the ARPA money in cash in FY22 in early July, but we booked that revenue into FY20, which is the 21, which is the previous year, because we were going to use the revenue loss concept for that. So it is to our advantage to book it early, because then we have to just prove revenue loss for a second year rather than waiting for 3 years. If we book this in 22, we would have to show the 22 revenue loss and then the FY23 revenue loss. By booking it in 21, we just have to do 1 more year. And the reason we did that is in case, our property taxes go high, we only have like a 7% increase that's allowed. So we might not meet that threshold. So in the way we have done it, we will be meeting it. But at the same time, this money is going to be reserved to balance the 22 budget, FY22.
So John, this is Art. Can you go back? I'm still struggling with the issue of the why it's 2019 and 2021. You explained that the pension liabilities are unknown at June 2020, 21.
So
But
I apologize, Commissioner Whipple. This should read 20. That is a typo on that's my
Okay.
mistake.
all right,
But,
thank you.
But
Now I understand. All right,
yeah,
fine.
but this net pension liability, I'm sorry, this one's computed on July 30, 2020, using a valuation of 2019.
That's fine.
So it's always a 2-year back.
I thought I had gotten to the point where you talked, the first part of that graph was 20 to 21 and the bottom part was 19 to 21, and that made no sense to me. But the whole thing is
I
20 to
apologize.
21, right? Okay,
That was
got
my oversight.
okay.
And it is okay on this one. So
John, just one. So on the liabilities, is the loan for the community center part of that?
it will all be flow into this. Yes. It's into the long-term debt. So that would be in the liabilities.
That seems kind of low then, that $10 million. Oh, that's from,
That's the 10 million, right?
the loan itself is 10 million. So you have some other liabilities above it. So this number should be a little bit higher, I would suspect it.
So we also, it's the change. It's also that, what we had last year could have come in. So this would reflect the change. It doesn't have to be a full number. You could have had a higher number last year that would change this. And I can look further, because the component here in terms of the loan, we did pay an installment for it already.
Yeah.
So now looking at the revenue side of it, now again, this is not general fund, this is government activities wide revenue. And here on the general revenue, so general revenues are usually all the taxes and others. We had a 1.4 million drop. Primarily what caused these drops are our TOT dropped from 2.3 million to hardly 660,000. That was the biggest one. Sales tax dropped from like 3.4 million to 3 million. And then a major hit was on the investment earnings because this interest rates really went to ground. We dropped from 1.7 million in the previous year to just 0.14. And I have details in the other page. But these were again offsetted by what saved us was our property tax that went up from 25.8 million to 28.5 million. Again, the program revenues here increased by 5.5 million. Primarily what caused this was the ARPA grant, which is around 3.8 million or something, 3.5 million odd dollars, as well as the CARES Act, which was 381. So that's almost $4 million worth of money that came in here to account for that 5.1. And then the other things that affected were the closing of the community center, but we did get a lot of community development activity on permitting that boosted that number. On the expenses side, our expenses came down lower because we couldn't spend a lot of the money that we planned to, especially because of the pandemic, and we had higher vacant positions that caused us to gain. So the effect of all of this, Kuljit, and that goes back to how the net position changed, all these revenues changed the net position by 4.3 million. So our net position went up by 4.3 million. Now coming to the meat of the report, which is looking at the general fund. Our general fund revenues, and I put in a table here. So, and then you have an attachment in your report that gives further breakdown of each of these items, but it's going to look very similar to the governmental wide activities. And you would say why? Because 85% of our revenues come in from the general fund for the whole government wide, right? So the explanations would look pretty similar. So total revenues increased primarily due to property tax, as I said, and the ARPA and CARES Act money that came in. Key revenue losses, again, as I said earlier, was TOT and interest income. Sales tax came in closer, but it's still below pre-pandemic levels. And what I've shown here is on the presentation, our total revenue was 48.5 million versus what we collected last year, which was 4.5. So it looks like we made 6.4%, but here's the ARPA adjustment, which is a one-time additional grant that came in. It's important to note that when we account for the ARPA grant, we actually are down 1.4% on our revenues on the general fund. Moving on to the general fund expenses, I've tried to break this down in two different ways. One is by the departments, and then one is how we spend the money. So you can have two looks at it. So primarily here, our decreases were in public safety, were due to vacancies. Same thing with public works, and they couldn't complete a lot of things that they had to. Recreation was lower because they were closed for a long time. The community centers closed, so their revenues have been lower and the expenses are lower as well, in line with what we expected. On the community development side, there is a larger increase in expenses, but then that's because they had a lot of contractual services, and they had a lot more increased activity in the permitting side. So they brought a lot more revenue than the 2.5% additional variance that they had on the expenses side. Admin and finance, that's so the city manager's office, executive and finance, they're grouped together in the presentation and in the CAFR, in the ACFA, sorry. So those went up by 4.8%, and primarily some of the reasons why those went up was because we used an audit company to cover for the finance director and finance manager positions. That cost a lot more money. We also had, in terms of the personnel side of it, it's mostly on the personnel side that it went up. We had these personnel cost increases here of 4.8%. Part of that is the negotiated labor increases. And then part of it was because in the city manager's office, we had a settlement with the previous city manager in last year, as well as with the ASD director. So those settlements boosted up this personal cost numbers.
This also has a legal in it, right?
Yes, everything is in here. So this 4.8% that you see as a budget variance is related to those items.
Got it. Thank you.
But the actual variance was lower. So moving on to the fund balances.
John, if I could interrupt, in the last slide, where does legal fall into? Does it fall under administration and finance?
Correct.
Okay. Thank you.
And then in the bottom portion that you see, it would fall into the second line, which would be the services and supplies category. We're going to broaden these categories in the future, but that's how it was presented currently. Moving on to the fund balance in the general fund. GASB requires that we break down fund balances in this format. Non-spendable basically means what you cannot touch. And it contains things like loans given to others, like we had a loan with the previous city manager to buy a home. So those would be non-spendable at the fund level balance. Anything that's a prepaid and inventory, those would come under this non-spendable area. Restricted would be something that is restricted from being spent. Like, let's say somebody gave $1 million in the general fund and said you can only spend interest. That would be here. We don't have any of those. The biggest category that we have is the assigned. So the assigned would be our operating reserve, which is seven odd millions. Our CalPERS, 5 million, and our OPEB 1.5 million. All those would be, and I'll get into the details on the next page with what those contain. And then the unassigned is basically what council can use to do whatever they want. Now, last year we had 7.86 in unassigned. This year we have 4.93, but that's not exactly how it's going to look like, because 3.6 million of that is coming from the ARPA money, which will be used in FY22. So what's actually available for programming this year is 1.21 million. And why is it so low? Partly because the unassigned fund balance that we are showing here was adjusted by 2.86 million to account for the purchase of 999 Fremont. So with 999 Fremont last year, the management here told the auditors that that was being held for resale. However, we could not find any evidence that we would resell or we can resell that. So it should have actually been an expense in FY20, which wasn't done. So we had to do an adjustment to the fund balance to adjust for that. If we had to not do that, we would have had 4 million in unassigned.
What is the, sorry, so just to clarify that. So the 999 Fremont purchase in FY20 should have shown our expenses to be 2.86 million more than what we actually published, right?
That is correct, because you held it like land for resale instead of expensing it like every other expense that you have, and then capitalizing it in your net position as a governmental activity.
So we booked it as an asset as opposed to an expense.
Correct.
And that lowered our expenses. So that means FY20 we had no revenue over expenses then, I guess.
So you overstated your FY20. So you ended up with 7.86 million that you see here in FY20. And I'm going to show you the reconciliation on how that balance looked like. So when you see an unassigned of 7.86, that's what council went and distributed.
I'm saying generally the P&L kind of for the fund, for the general fund would have been negative then if that 2.86 was taken out of it.
It would have been lower. It wouldn't be negative. It would have been around 5 point some million, because it ended up at 7.86.
Not the unassigned, but the okay, maybe it is right. Okay, all right, sounds good.
Can I stay on that slide? What's the unrealized gain or loss?
So this is another, and on the next slide, it will be very clear. So the unrealized gain loss is, we have all these investments with PFM, and those investments, GASB or accounting rules require that you market to market every year. And what happened in the past is when that was marked to market, it is paper money, right? Because you say that I'm marking this to market, and then the next day or the first day of
Yeah,
the
no,
next year-
I get all this. That's the equivalent of other comprehensive gain or loss, right?
Correct.
It's just,
Which-
okay, I get it.
which was around $1 million in FY20 and was distributed. It should not have been. So what I have done here is I have reserved it. I have said that it is not distributable.
I just want to point out, I think it's really great, John, that you're catching these things in FY20 things. I mean, those two errors themselves are significant. I mean, 2.86 for the purchase being incorrectly assigned, and then the unrealized gain being correcting that. That's really commendable. I really appreciate you guys going back and fixing that.
Yeah, and as we go through this, I will be showing how that reconciles, just for the benefit of everybody. So here's the details of every category we have. So under the non-spendable, as I said, we have the inventory, notes receivable, etc. So you can see the change from last year to this year. And then one of the big ones for us is our emergency and operating reserve. We like to see that at 20%. It was 20%. However, it has dropped to below 20%, partly because in FY20, council authorized a payment of 1.04 million to settle 40 Main, and that came out of the operating reserve. So our operating reserve between 20 and 21 went up to 8.5 million, and then we paid this 1 million off, so it came down and is now below 20% at 18.7. And then what's also here is, I know Commissioner Richmond already asked me this question earlier, but this is what I was saying should not be distributable. And I was going to be explaining what I told you previously here. So now you already know, you jumped the gun for me. And we're going to look on the next slide at the key changes, what really caused us to go from this 7.8 million to 1.2, and how I would read it. So in FY20, the financial statement showed that you had an unassigned fund balance of 7.86. That doesn't mean you made 7.86 during the year. You could have made 6, and then there would be other items. So what I've seen here is that we had a portion from FY19 that was not distributed in FY19. It got distributed in FY20. So the true balance would have been 6.78 million. Sorry for jumping that slide. And then had we to not reclassify the land purchase here and the unrealized gain loss from last year to this year, there was also an encumbrance. So there was money, 260,000 in FY20 that was to be spent in 21, but it should have been reduced from this 7.8 before distributing that whole amount, but they did not. So technically, to make it equal, we would have made $5 million this year instead of the 1.21 that you see here. And these are the primary factors that affected it. Of course, the big one is the land repurchase. And then if we made 5.87 last year in true terms, that is adjusted terms, and 4.9 here, why did that happen? I'm reconciling that too. So because this is something that I want you to see as long-term, right? So the 4.99 became that one because we have this additional debt service for the community center that's an increased cost going forward for a long time. And then we lost around 650,000 in revenue last year, between last year and the year before that. So in comparison, the expenses increased on paper, but when I adjust this point, it increased by 230,000, but I'm adjusting it for the number I'm showing here, just to show you an equivalent of the two. So the giveaway or the takeaway from here is that had all things been done correctly in FY20, we should have made only 5.8, and then we would have had 5 million this year. We have 3 major funds in the city. So I'm going to talk about the other 2. The first major fund is the general fund, and then the in lieu Parkland Fund is another major fund. Revenues in the Parkland Fund were 1.6 million during FY20. We transferred 1.3 million to the CIP for CIP eligible contracts. The fund balance today at the end of the year is 5.8 million. But when you see that, you also have to see that we have committed in prior plus FY22, we've committed 1.2 million from the park in lieu fees to the CIP, which means we have a balance in the usable balance of 4.58 million there. With the capital projects fund, we spent 22.8 million last year. A lot of that is for the community center. We ended up with a fund balance of 11.5 million. That is what the general fund had contributed in past years, and whatever the balance of that is now 11.5. When I look at the 5-year CIP and the budget that was adopted last year, it shows that our total commitments for the prior balances and FY22 is 13.5 million. So this kind of tells me that we have a 2 million shortfall, but we anticipate that realistically the fund balance would be lower, or we would require to find 1 million if we are to account for the community center reserve, which is around 680,000. And I showed that in the fund balance. And also we know that we completed that community center below cost, under budget. So technically my anticipation, once I get into cleaning up the CIPs, that we would be short by 1 million.
So, but you're assuming that there is going to be some potential contribution to CIP, which is revenue over expenses in the general fund this end of this fiscal year, and that
correct. So that would be this would be something that council would need to decide. We have $1.2 million that we can distribute, right? This $1.2 million. So council can decide whether they want to put that wholly in the CIP, or whether they first want to increase their operating reserve back to 20% and then put the rest of it to the CIP. You know, I cannot speculate what they would decide, but that would be the council's prerogative to decide what to do with that. And then,
But I think on that one, John and other members of the commission should weigh in. I think the commission has been unwavering in its view that the 20% reserve is the right number. And I think we were none too pleased it was invaded last year and not run through the general fund. So for whatever that's worth, other people can take a view on it, but we always thought the 20% was the right number.
right, and I think, you know, at the end of my presentation, I'll be open to taking questions, and we can have a discussion on what the commission's view is going to be to address to council, right? So,
and I think if I can weigh in on that real quick, the 20% that we're below now, council has to make a decision on that. But then also, as John showed, we're 2 million short on the capital side for our CIP as well. And we've only got 1.2 million that's assignable. And if we assign all that, then our unassignable is gone as well. So funding up to 20% is certainly a policy decision. And that would be making a conscious choice that our capital projects would not be fully funded. So I think one of the things we're going to have to start looking at is which capital projects that were planned will not be able to be completed this year. And then when we talk in the future about how we budget and what we fund first, we have to make sure that we're funding our financial underpinnings first. So the 20% has to come first, right? Before we fund other things. So we're going to have to talk at the council retreat in January about when we push funding from one source and it disappears, we're making a conscious decision not to fund another area. And that's a choice we have to make here. And so if council does fund the 20%, which I do think is the right decision to fund that reserve first, then the pull is going to come out of capital most likely.
Yep, that's all fair.
Gabe, you know, that the impact of COVID and the impact on our FY 2021 revenue is going to be on CIP the year 3, year 4, right? So not just this year, but probably the next year also. We're just not going to have anything to contribute to it. You know, that's been sort of the conclusion we've known, and this particular council has known from the beginning that, hey, we've opted to keep our service levels and staff at full. And the trade-off was that would mean that we would have no money to add to the CIP bucket. So we had that $7-8 million, and we're working it down, but we're not going to be able to add that. So I think that it will not be a surprise to the council that if we put the money that we have left into bringing our balance up to 20%, that we'll have nothing left to add to that bucket. I think that conversation's happened more than once.
And I think that's correct. One of the issues we're discovering is that we did have a plan to go in, keep our services the same and not fund capital, but that kind of drops on top of a long-term disinvestment in our facilities and our assets. So by not investing in them, we've also made a choice that when it is time to invest in them, it will be more expensive. And that comes at a time when we have less funds now to put at it. So council is going to have to make some, I think, very difficult decisions on how we want to operate as a city.
Yeah, I mean, generally we have a fairly good news financials, but this is the trickiest thing for the council to decide as far as finances for this fiscal year and also next fiscal year, I suspect to be similar.
I think that's right.
And then finally, I'm going to move on to the Memorandum of Internal Control. Now, this document came to us today, so we didn't have it in time to post. I'm just going to touch upon what the auditors actually found during their audit, and I will agendize this on to the next meeting with what our responses will be. So one of the issues that they raised was that vendors were not being paid on time. There was a big delay. Part of the reason what I believe happened was departments were not given the correct instructions on how to get those to finance, and they were getting lost in space. We have set procedures, but I'll touch upon what we have done in our next meeting because we just got this today. I just wanted the commission to know what they said before getting into the full responses, but we have a plan and we've already addressed, in fact, before this memorandum came out with regards to invoices. Outdated signature cards. So our PFM portfolio was held with Union Bank. The custodian was Union Bank, and Union Bank custody services were taken over by US Bank. They bought them out, and then when they bought them out, this account was automatically closed in August. But there was a period between the time the old finance, the SD director and city manager left in August, that there were still signatories on this account and they were not removed. So that's what the auditors observed. And then finally, they also noted that the IT systems don't have a risk management policy, or I have to figure out from John and our IT manager if we do or we do not, so I don't want to comment on that, but they are recommending that we have one.
Do they mean like an insurance policy against being hacked or?
No, it's more about how will you protect your systems, a formal document on what procedures you're taking to protect yourself from phishing attacks or from intrusions from the outside and stuff like that. So they don't have it as a written document, as I believe what the auditors are saying. But we will get into the details of this in our next commission meeting, because we just got this today and we have to find the right answers and bring it forward. So, but I wanted the commission to know that this is what came up from the audit, even though it was delayed.
And
Can I ask a question on the timely invoice payments? How late were we paying our suppliers? Do you have an idea?
Sometimes 6 months and 8 months late, because those invoices were lost
Got
in
it.
space.
Did they have any comments about our new financial system? Were they able to use it okay or?
I believe that would be, maybe Grace can answer that when we get to her. So I'm done with my side of it. So the action I'm requesting is just to receive the report and presentation, recommend the city council approve the ACFO when it goes to them at the next council meeting. And I'm open to answering questions. I would suggest that let's have Grace, the audit partner for Mays and Associates, make her presentation. And after that, we can open it up to questions and discussion. Does that sound like a plan?
Yeah.
Great. So I'm going to stop sharing my screen. And Grace, you can have the floor.
Thank you, John. It's a really detailed presentation, so it's pretty much cover all the detailed financials that the commissioners need to know. Good evening, commissioners. So we have concluded our audit for FY21, and this is my second year running the job for City of Los Altos. So we performed the year-end audit in a hybrid nature, both remotely and on-site for a few days due to the ongoing pandemic. And yeah, so but this year compared with last year, the audit went much more smoothly and much more organized. And for that, I really want to say with John and June coming on board, had cleaned up a lot of stuff and do a lot of reconciliation, a big plus to the audit, which enable us to complete our audit in a more timely manner. So the reconciliation of all the major accounts, and what I believe one of the commissioner mentioned about the new financial system implementation, that helps a lot in terms of doing the detailed reconciliation. So that was definitely a big plus. And as you, John mentioned that our management letter and the required communication letter will be finalized in a few more days. But one of the significant deficiency in prior year that have been on the management letter is removed out due to the main implementation of the new financial system, that the super user rights is no longer one of our concern. So that is being removed out of the management letter. So
I'm sorry, can I interrupt you for a moment, Grace? Could you repeat what you said about the super user?
In prior years, there's one of the items for super user rights. It's basically the financial system allows users to be able to access different modules of the financial system.
Right.
Yeah, so that's one of the biggest internal control concern that we have in prior years. For internal control purpose, we super user rights should be restricted to ideally for as a IT department will be ideally the one that have a segregation of duties, assigning the rights to the finance. So each finance staff should have its limited access to the financial system. That
Right.
would be a safeguard of the financial asset when it comes to either the reporting or the financial asset recording. Yeah.
Does our system allow checks and balances for the super user that, two-person identification or some sort of, so that one super user can't do everything without somebody else checking on it?
Yeah, so for the under the new finance system implementation, we do all type of testing. Based on our testing, there's no particular concern that come up this year.
Great, it's a big change. Thank you very much. Finally, we have this select.
Could you expand on Central Square and what is your opinion of Central Square and the system that we're using?
We are the financial auditor, so we don't opine on internal control, but based on our financial test, based on our audit on the financial transactions, we did not notice any particular concern when it comes to the segregation of internal control and the overall financial system. There's no particular concern that it comes to our attention.
Okay.
That's that.
All right, Grace, were there any other, I can't remember from last year, what's left, if anything, in the way of significant deficiencies?
So in the last year, there's a few things that, one is the journal entry posting, and the other one is the timely reconciliation for the bank reconciliation. For these two items, because this year is still under the new finance team transition, so these two are still ongoing. So we, in our final letter, we do indicate the current status and pending on the management to update the current status. So those two are still remain ongoing from last year. It's not cited as a new item this year because the timely reconciliation of the bank reconciliation as well as the journal entry posting, those are still one of the ongoing items that we have noted.
Thank you.
Oh, you're welcome. So yeah, so we have concluded our audit, but as you can see, the annual report is still just a draft form. We're still in the process of fine-tuning it, making sure that all the number kind of fine-tuning it, polishing it. So, but at this moment, there's no major items that come across that we don't expect any more adjustment journal entries. And one of the things I wanted to is just the GFOA award is still pending for fiscal year 20 due to the long-lasting pandemic and just the ripple effect of everything. It's just delaying the governmental finance office associations to process. So it's kind of like a common phenomenon faced by quite some of the cities that they're still waiting for the GFOA award to come out. So if it comes in time, we will review and see if there's any presentation when it comes to financial reporting, if there's any reporting that we need to justify or to reflect. So just to be aware that the annual report right now is still in the draft form. Okay.
Did you, I'm going to segue back to Central Square because there's been a number of concerns that were brought up on Central Square at previous meetings. Do other cities have any issues with Central Square that you're aware of, or are there any issues you know of with regard to Central Square?
Central Square is one of actually for my clients, this is the only city I have on Central Square. Most of the city have other type of financial system, so I am not aware of any particular concern or issue, just because of I don't have clients that have. Yeah.
Okay, thank you very much.
Oh, you're welcome.
So I had one quick question on a slightly different track. So if the format's in, or if the report is in draft state, you'll probably at least a few more days till you get out. Do you believe you're going to get it out before 12/31/21, or is it going to leak over into January?
So if I can take that, Commissioner Whipple, we have to take the final to council at it is planned to be taken to council at their second meeting in January.
Okay.
Because council has to approve the final document, right? So we plan to also do this presentation at the retreat for council. So we have time between now right up to probably mid of January to clean up everything. And one of the reasons why we are planning to wait that long is to give enough time to see if we'll get the GFOA award in time as well.
Okay.
But
So I guess
don't anticipate the financials to change by any significant amount. And if it does, then we would come back to the commission with a special meeting.
Okay. So I guess the question is, at this point, we're looking at financials that are almost 6 months old, or will be more than 6 months old by the time they're finally approved. Is that typical for cities to do? I'm used to being a public company CFO, and we had our audited financial statements in 7 days.
That shocked me as well when I first came into government. So if the earliest ever a city has completed would be November, I believe, and I'll let Grace answer that.
Yeah, Commissioner, it's actually quite common for a city to, actually majority of the city do not finalize their annual comprehensive report until right up to December. And it's not uncommon for a city to even finalize by January or February, even March timeframe. And yeah, as a matter of fact, the GFOA do allow cities to file for extension if they finalize after the December 30th timeline. So majority of the city actually finalize the report right before the end of December. So that's why this is our peak of our audit season.
Okay, thank you.
Oh,
Still learning.
I can give you a little background on that. So, I mean, yes, the CAFR or the ACFR is a formal document that, is not sort of in our control. But for the last couple of years, we've tried really hard to make sure that internally we can actually close a quarter, and have some sense of where we are quarter by quarter. And that's been actually a big goal of the council as well. But as soon as we sort of got some momentum behind it early last fiscal year, we had such massive attrition in our finance department that we had to hire outside people just to keep our books going.
Right.
So I think it's another goal that we want to achieve once we have stability in the finance department. So I think John and all, we're really hoping that we can have unofficial, closings of the books every quarter, which
Right.
we have not done in the foreseeable history of the city. So it would be great if we can go back to that, even though the ACFR does take 6 months or 8 months to close the formal documents, but the quarterly closes is still a goal in my mind.
Great, thank you.
Yeah, internally, our plan is to close by the 10th of the following month, the previous month. So not really just quarterly, but we intend to close every month by the 10th. But once we have stability, so right now we are in phase 1. What we've done is massive cleanup and reorg, which Grace can tell you. There's phase 2, which is further cleanup, and then we've lost staff, so hiring new staff, and then cleaning internal procedures, and then moving on to that thing. It's certainly something good to do. However, you also have to realize that certain trends won't come in correctly on a quarterly basis. So let's say the first quarter, right? The first quarter, if you want to look at what was your sales tax, you won't know the March sales tax number till somewhere in end of April or maybe mid-May, because by the time the state collects it, remits it to the city. So the usefulness of those numbers are not really great. If you say on X date, it's not like a private company. I know what my accruals are going to be. I can anticipate that my sales tax will be that much. So the way I like to do it going forward would be, especially the first or second quarter would be an update where we think we stand in relation to our budget and how do the numbers align and if we need to be adjusting. So a real good firm update would be somewhere in the second or third quarter would be a better way to update. The first quarter is really going to be, yes, we are looking okay in terms of where we thought we were in the budget, if that makes sense.
That's why I think monthly is a great goal. But I mean, I think if we could even just have a discussion on the council's agenda once a quarter about the state of our finances, saying yes, everything is fine, even if it, it'd be great if it just only took 5 minutes because there's nothing to report.
Yeah,
it's important to build that rhythm to have that conversation once a quarter.
Yeah, that's one of our objectives. I'm sorry, Grace, we interrupted you.
Oh no, yeah, I think that's pretty much it. I'm here to answer any questions that you might have.
No further questions from me.
Any questions for?
I have a question. Grace, for cybersecurity, what standards are you seeing other cities take? In our field, aerospace, we're going toward the NIST, and the government's pushing very hard for the NIST. And I have some feelers out to some of my friends in the county. And I'm curious, what have you seen for cybersecurity for standards?
I'm not in a position to talk about cybersecurity because my focus is on the finance. The reason why we have a recommendation on the cybersecurity is because we incorporate it in making sure that the financial system is not subjected to, it have certain level of security when it comes to cybersecurity. But what I have observed is that across the board in the last few years, there's quite some concern for many cities, either due to the phishing or due to the cyber attacks. And so all the city pretty much, if they have the funding available, and for a certain level, they have been paying more attention to adjust. That's why there's no across the board, and I'm not an IT person, so I'm not in a good position to say what would be the good recommendation. That's certainly up to the information system departments, but obviously there's a trend in all the cities to try to focus allocating more fundings to enhance the cyber securities, because it's the cyber attacks has been kind of like in the last few years, it's been a concern.
Thank you.
John, this is Mark. I have a hard close at 7:15. So if there's something we have to vote on with this, I would appreciate it if we could do it.
No, we're just receiving this presentation.
Okay.
Okay, so there's no actions?
No.
No vote? Okay,
But, so Mark, just an opportunity for us to be able to ask the auditors if you have any questions about it. So if you have anything, if not, that's okay.
Yeah, I'm good.
Yeah.
Okay, thank you. I have to leave.
Thank you, Commissioner Free. And just for the record, I want to mark Vice Chair McClatchy present. Can you, since I was presenting, I don't know the time that you joined, so I can make a note of it.
6:10.
16. Okay, thank you. Any other questions for us? Anything you want to talk about? This is your time. You can discuss what you want to do with the 1.2 or your recommendations, or I'm not sure if there's any further information you need from me on this subject.
I think I would echo Tony's comment earlier that let's try and stabilize our, and get back to 20% on emergency operating reserves. And I think it should not be a surprise to the council that they will have almost nothing to add to the CIP bucket. So we've been sort of planning for that. So I think I would echo that I think the commission would pretty heavily support, would want us to work on the emergency operating reserve.
I agree.
Any other comments?
I think we're just happy to see that this thing got done timely. And I mean, considering where we were 2-3 months ago, where we didn't know how this was going to get all done. So I really appreciate you jumping in and getting this all sorted out. Thank you very much.
Thank you.
Thank you.
John, on your email, the first link for me didn't work. Did you send another link?
Yeah, it was the first link. There was a second one that I sent because the first one was removed.
Okay, this is for item 2, staff report. That link.
Oh, you mean the link to open items on the agenda?
Yeah,
Which one did not work for you?
the staff report annual
Right.
comprehensive.
It worked for a few days and then stopped working today, I believe.
Oh,
I was lucky I downloaded it earlier, so.
Okay, I'll look into that. That's very strange because some of you read it, right?
Oh, yeah,
Okay.
Yes.
but I downloaded it a few days ago. But if you go
Okay.
now, you get an error 404.
Yeah, it says page not found.
Yeah, I downloaded it a few days ago too.
Okay, I'll make sure to check what's going on. And Vice Chair, do you want me to email it to you separately?
Yes, please.
I will do that.
Thank you.
Any other comments on this subject? Any other commissioner comments in general? Future agenda?
So
No, a slight variance from it, because I'll beat Kuljit to this question. Can you remind us, what's your budget for property taxes for June 2022? And where do you guys think you're at in talking to the county on tracking against that? Because that's really the big enchilada here.
So I don't have the budget number on top of my head, but in terms of Gabe and me discussing this with our property tax consultants, you're talking about property tax, right?
yes,
Yep. So
Yeah.
you guys we did 28.5 in fiscal 21. I also don't remember what the budget. So
Yeah.
the question is where that's headed and what that does to sop up any of the difference here. Because that's always been, hope is not a strategy, but somehow hope for higher than expected real estate tax revenue has always seemed to, in hindsight, seem like the strategy here. And there's been lots of transactions. So I'm just, in terms of finding $1 million or $2 million of the gap that we knew that was coming, it's usually what saves the day. So my question is whether it bears any promise that it's going to save the day again.
I'll let the city manager deliver some good news.
Okay, that was
so-
a softball.
Without getting into the exact numbers, we think the actuals are going to be better than budgeted and also better than forecast.
Yeah.
And we're seeing a lot of turnover in the market for homes that were held a long time. So those are being reassessed as well. So we really think the property tax is going to be very strong, especially compared to the budget, which was conservative.
Yeah, okay.
Yeah.
Okay. So Kuljit, I don't know whether this is the appropriate time to do this or we delay it, but I know that Gary Callback had reached out to you about the possibility of forming a subcommittee to assist in the police building effort. Do we not worry about that and do it next month, or what do we do?
No, we can talk about it now. I just want to make sure that is there anything else in the agenda that had to be covered, John, or can we jump to that subject?
We have covered what's on the agenda for today. There's just one more thing with regards to the council handbook that we talked about.
Yeah. So Art, I think there's obviously, no problem in having a subcommittee, but it's just a question of timing of that. So as to when do we start a subcommittee? Of course, we can start a subcommittee that can have nothing going on, because I think we don't have clarity from the council which way they're going to go with that, with refurbishing or rebuilding just the police department or what else. So I think if they reach some sort of direction, then maybe we'll have something juicy for the subcommittee to jump into. I'm quite happy to, for us to be able to sort of engage at that point. But it feels like it might be too early for there to be anything for the subcommittee to do right now.
Yeah, I think you're right that it is early. I just wanted the subcommittee of the council has been formed, and one of the members is actually in the audience this evening. The question is, do we, I think we just want to make sure that they understand that subcommittee of the council will be supported by the commission at the appropriate time, right? With a non-Brown Act support so that they can continue to work on that project in the background.
Yeah, I think that was sort of, I understood, I mean, from Gary's, request that was sort of what he was trying to do, is to make sure he doesn't end up in any kind of Brown Act violation by having a conversation about it with somebody. So if it's formalized as a subcommittee, it makes it a lot easier. I think my feeling is I think we can create a subcommittee, but I feel like right now we don't have anything for the subcommittee to work on right now. So,
all right, so why don't we wait till the next meeting in January?
Okay, sounds good. That's fine. Okay, and then the other thing that was I just wanted to bring up is this. We normally have like a tradition that the commission has a chair who's elected, but usually it's the last year of that person's role on the commission, and I'm the chair, but my term I think still has a year left. So either we have to formally redo an election or something, or change tradition or convention. So I wanted to bring that up because I think that's what really we should be sort of compliant with really the handbook and what the rules are of the commission. We're not a very controversial kind of a commission where being the chair or not the chair has any significance, but some other commissions really do, because I think controlling the agenda of like a Parks Commission, et cetera, is really important. So I'm happy either way, but it would be unusual for me to step down and not leave the commission. So which is sort of the dilemma that I'm kind of wondering what to do. So I'll open it up for John. Any ideas, or Gabe, any help here?
I would think that we can agendize it for the next meeting as election of a new chair, and then if the commission so desires to keep the tradition of the same chair, they can nominate you or somebody else and vote on it. Because the council handbook basically says we need to have a chair every year, the election for the chair every year, and vice chair.
And the convention is that people usually are the chair the last year of their role in the commission, right? Okay, so we can do that next time.
I will put that as an agenda item.
Okay.
And is there anything else that the commission would like to see in the future on the agenda?
I did have a question, I think, about, or more of our guidance from you and our city manager about the January session, the study group that's happening, as to what level of involvement, engagement should we come in. But we've not been invited formally by the city council to do anything there. So would you like us to attend? Is there a particular time, or is it a particular subject, or can you give us a little bit of help on what how you should think about it?
I think John's waiting for me. So we haven't sent out invitations yet. We were initially planning an in-person event, and that's how we announced it. Given the state of affairs today, we're likely going to transition to an online event, which is going to cause us to rebalance some of the presentations. We'll send out invitations once we've got the final agenda approved and ready to go. There won't be at this stage a formal role for the boards and the commissions. There's mostly policy topics for council to go over, but I do anticipate work coming to the boards and commissions as council starts making policy decisions and setting the guidance for the boards and commissions to make recommendations.
I just want to be careful, because I think last time there was a council meeting, and there was some expectation that we will have a quorum of the Financial Commission at that meeting. But it wasn't clear to us, because in fact it got put on our calendar and got canceled, etc. Fortunately, I think a few of us were there anyways, so we I think had a good meeting. But we were the only commission that didn't have a full quorum for that session, just literally because I think it was not on people's calendar. So if you could just make sure, I don't want to do that twice. It looks kind of bad for the commission to be slow.
We'll make the invitation clear. Right now, it's a 2-day event, and I don't think we'd anticipate a quorum of any board and commission, though everyone will be invited to watch.
Okay, great. Okay, anybody else who's on the call had a question for our auditor? This is a good time. Open mic.
Nope, all good.
All good.
Okay, so I guess it's 7:30. We're half an hour past our time, but time to close up the meeting.
Great.
Okay.
Thank
bye.
you.
Thank you.
All right,
thank you.
everybody have a great
Yeah.
holiday.
Thank
Great
you.
holiday.
Yeah.
See you soon.
Happy
See you next year.
Bye.